Good day traders, welcome back to the Forex Boat Trading Academy with Victor. And today we will be looking at the Canadian versus Japanese yen currency pair with expected potential move to the upside. Before we start, I would like to remind you as usual that all the information in this video is for educational purpose and should not be considered as a financial advice. Let's have a look at what's happening on this currency pair. First off, we see this massive support which has been rejected. The support has been rejected along with the 200 exponential moving average. What we see is price reached the moving average, produced a spike and closed higher. And this is exactly what I like to see when I look for a potential wave to the upside. So the double rejection of the previous support as well as moving average. Besides, what we see is the formation of the bullish divergence on the RCI oscillator. So yet another confirmation that this could be quite a short-term wave to the upside. You can see that the critical point is just below the low established today. Because it's a 1 hour chart, I don't think there is a need to wait for any longer, and if price breaks lower then it will get invalidated. So it's either up or down, but I do think we will be heading towards 79.36 level, which is confirmed by two Fibonacci retracement levels. I have used two last waves to the upside and the last wave to the downside. So you can see both of them, and I have used all fib levels, and then I see that two of them correspond at 79.36. This is 88.6 fibs applied to the last wave down and 61.8 fibs applied to the last wave up. And this should be the key resistance for this currency pair, although if broken we might see quite a massive uptrend. But we need to consider that the price failed to produce high here. It was stopped just below the previous high, and this might be just a correctional move rather than the long-term uptrend continuation. So keeping that in mind for this opportunity, that this could be pretty short-term correction to the upside before if price goes down. So yeah, the idea is pretty simple. At the time I started recording, it was roughly at 79.04, and this is the original price for this idea. And we can see that I am using more or less 2-to-1 reward to risk ratio, which is perfect for this opportunity because it's just below critical point, below the low produced today. Okay, so we are gonna go through now all the previous ideas. We had piled up so many, it's getting more and more of them. We need to get rid to basically close them in profit, hopefully. And this week we already closed two of them in profit. Okay, let's run through all the ideas. Australian Canadian dollar, I do think will be going up towards the key resistance, although it's a risk-free trade. Australian Japanese yen, one of my favorites, still remains quite bullish. And considering that we have Canadian Japanese yen to the upside, it could be Japanese yen weakness could be helping this pair to grow. So today I do hope we will see some movement, and of course this is a risk-free opportunity as well. Same here, risk-free opportunity. Canadian Swiss franc, I do think there will be a rally starting anytime, but if it goes below here we might be invalidating this idea. So to stay on the safe side, getting it risk-free could be a good idea. But consider the fact that there could be spikes produced, and it will be probably important to see whether the price manages to close below the moving average on the 4-hour time frame. New Zealand Swiss franc, still expecting the move. It's a risk-free trade as well. We're expecting the move towards this resistance. Perhaps we will see that today due to the Swiss franc weakness along with Australian Swiss franc. Euro New Zealand dollar, same, still valid. We could be seeing today and tomorrow this final wave to the downside where most of our trade might be actually reaching the key support and resistance level. So obviously a risk-free opportunity here and waiting for the target. Same for the Australian euro. It's currently at the key resistance. It's a resistance zone which previously was the support, as can be seen here, and from this point onwards we could see price moving down. Pound Australian dollar. I think the best here to secure this idea, if well, it wasn't originally, we were already kicked out, so here it's probably best to fix if it will be in profit. Today we might see this strong correction. We nearly reached the critical point, so this idea is not that interesting, especially after what happened to the pound dollar, which we will look in a second. Dollar Canadian. Since we're having Canadian versus Japanese to the upside, it's best to secure this idea, make it a risk-free, because it could be the Canadian that is actually strong, which will push the pair down. And we might re-enter the opportunity after and if the resistance on the Canadian Japanese yen will be tested. So here could be a hedge, basically dollar Canadian, Canadian Japanese. Seems like a hedge trade if both of them will be open. So here should be a risk-free opportunity. Dollar Japanese yen, I do think we will eventually move to the upside. So yes, it's a valid idea, although we are going through the range trading. So here we are above the moving average, which could be the support, and still expecting move to the upside. Now, what I didn't like is obviously this, but as I said, guys, this is a low priority idea because we are not that clear on the direction of the market. So the risk reward here was very good. In regards to the risk here, it was very low, and it was worth taking it considering the potential opportunity, but overall it was out, and it seems like the pound will be going up. I had some view on the pound Swiss franc, which seems quite bullish, and maybe there will be an uptrend on this pair, but it's not that clear. But overall pound Australian is out, and therefore I think it's better to basically exit the pound Australian dollar, because pound might be going to the upside, but at the same time Australian dollar seems very strong, which could also go to the upside even more, thus making the pound Australian dollar going down. I think it's best to fix it at the break-even point, basically exit the trade if it hits that level. We went through Australian dollar, Canadian dollar, Japanese, pound, dollar. Okay, now we are left with the euro Swiss franc. Here we still have this idea valid. It was expected there could be even spike below this low, and but for now it's a valid idea. There is nothing changed. Yes, it continues to range, but there was no clear breakout below this low. I mean, daily close below would confirm that there new low printed, and in this case obviously the risk will be high, and we can see that price just approached 88.6 pips here, and it could be the support that we need. So that's it, guys. We updated on all the ideas, with the new idea being Canadian Japanese yen. I hope you enjoyed it. Let me know what you think down in the comments below. Don't forget to subscribe, ask your questions, and we will talk to you tomorrow.